Following the Ukrainian conflict, a number of restrictions and countersanctions have been put in place between the West and Russia, with financial penalties being the most significant. The idea that the US dollar is the only form of payment has been dispelled by Russia's countersanction. Currency in the energy industry, which has led to a lot of speculation in the minds of people across the world. Numerous economists believe that the US dollar's dominance as the only currency accepted for settlement on global commodities markets is coming to an end. The beginning of oil price in dollars. The Bretton Woods Conference is where the US dollar got its start as the dominant currency in the world monetary system. Prior to the end of World War II, the United States and its allies decided to create a fixed exchange rate system in which the price of gold was tied to the value of the dollar, and the exchange rates of other currencies were tied to the dollar. The Bretton Woods system is based on this idea. Subscribe to this channel to watch other amazing news you didn't hear about. Initial implementation of the Bretton Woods system was successful, and it significantly contributed to the global economy's recovery. However, when exports to the US rebounded and the economies of Western European nations and Japan recovered, the US ran a trade deficit with these nations. The funds from the trade surplus were used to purchase as treasury notes by Western Europe and Japan, but the interest rates on those bills kept declining. The cost of borrowing in US dollars decreased for us businesses at the same time, and they made significant investments abroad with cash at much cheaper interest rates, which resulted in explosive returns. Western European nations disapproved of this conduct and quickly discovered the Bretton Woods system's flaws, which led to the first dollar crisis. Richard Nixon, the country's president at the time, declared that the US would unilaterally default on its debt, shutting the window of opportunity for the exchange of the US dollar and gold, and subsequently opting to devalue the dollar. The steep devaluation of the dollar reduced the purchase power of Western Europe's and Japan's dollar assets, which both had significant holdings of US Treasury notes. After the Bretton Woods system failed, how did the US regain the dollar's hegemony? Early in the 1970s, U.S. Secretary of State Henry Kissinger frequently traveled to Middle Eastern oil, producing nations, and finally convinced Saudi Arabia to only conduct oil transactions in U.S. dollars. The Saudis later convinced other OPEC participants to do the same, and they finally agreed to abandon even the British pound in favor of the U.S. dollar as their only oil trade currency. Oil is the single most significant source of energy for nations' economies, and each nation has to have a lot of funds on hand to be able to buy it on the world market. Following oil, it was determined that each subsequent commodity future would be traded in US dollars. This increased the demand for dollars and guaranteed the dollar's dominance in the global monetary system. The reasoning behind harvesting in dollars. The price fluctuations of these commodities became dependent on factors other than just supply and demand once the US dollar was adopted as the pricing and trading currency for commodities on international market. The impact of changes in the US dollar exchange rate on commodity prices became even more significant. As a result, there was a seesaw relationship between the dollar exchange rate and the price of commodities. When the dollar increased in value, the price of commodities decreased in value. The price of commodities increased in value. The price of commodities increased, skipping the dollar trade's dead end. Since the US dollar is the dominant currency in the global monetary system, several nations have also tried to get around it out of concern that they may face problems if they become overly dependent on it. In order to avoid the economic volatility brought on by changes in the dollar, which subsequently gave rise to the euro, Western European nations established the European monetary system in the 1970s. The European monetary system was subjected to several financial assaults when the EU member states chose to establish a unified currency. Between 1992 and 1993, the pound, the Italian lira, the Spanish peso, and the French francs all engaged in life or death battles with speculative capital. The euro's monetary system momentarily expelled the pound, the lira, and the peso. With Germany's assistance, the French franc was able to withstand the speculative wave, but was forced to endure a humiliating 15% fluctuation in its currency rate. There were several more upheavals in Europe after the euro was adopted as the common currency. Each turmoil drew money from Europe to the United States, strengthening the currency. A number of Arab oil-producing nations attempted to utilize the euro as a hedge against the petrodollar pricing mechanism after the euro's introduction, and these nations were targeted by the US. The U.S. declared war on Iraq and overthrew Saddam's government. The U.S. actively participated in the conflict in Libya that overthrew the Gaddafi government. Apart from geopolitical considerations, the fact that both of these nations were oil exporters and had chosen to settle their oil shipments in euros rather than dollars was a significant factor in the U.S. decision to overthrow the regimes of both nations by force. Since 2022, de-dollarization of transactions like international commerce has been more popular in several nations. These nations are searching for alternatives to the dollar due to three considerations. First off, financial measures against Russia have shown that the dollar is not essential. The U.S. and European nations placed harsh economic and financial sanctions on Russia in the early stages of the Russian-Ukrainian war, leading to a fast depreciation of the ruble. This trend was further exacerbated by the subsequent flight of Russian capital. The situation swiftly changed nonetheless. Once the Russian central bank agreed to enable all hostile nations to settle their energy imports from Russia in rubles, due to the sanctions, Russia's energy exports have decreased as a result of the war, which has nonetheless resulted in higher real foreign exchange gains. The US dollar was an inflated currency for a while since it was the primary currency used on international markets and was used to trade commodities like oil and gas. Now, Russia's counter-sanctions have demonstrated that the dollar is not essential and that what is actually essential are commodities like oil and gas. Second, following two U.S. government rulings in 2022, many significant nations with foreign exchange reserves that hold us dollar assets are now concerned that their holdings may be taken over as hostages by the U.S. government. The first is the U.S. government's decision to seize $7 billion of the Afghan central bank's assets in February of this year, of which $3.05 billion will be used to compensate the families of the September 11 victims and another $3.05 billion to help the Afghan people. Second, after the war between Russia and Ukraine, the U.S. froze all Russian assets in the country, including those of the Russian central bank and other commercial institutions. The U.S. decision has angered Arab oil-producing nations with significant dollar holdings that fear us penalties for a variety of reasons. For instance, negotiations regarding settling oil transactions in yuan have started between China and Saudi Arabia and other nations. The high rate of inflation in the U.S. has also caused several nations to realize that having assets denominated in dollars will decrease their own buying power. The U.S. has had monthly inflation rates exceeding 9, and the Fed should have hiked interest rates considerably long ago to reduce inflation. However, the Fed is obviously being much more careful this time around because prior interest rate increases to combat inflation have popped financial bubbles and brought on financial disasters. The drawback is that inflation will probably continue for a while. The U.S. tolerates inflation to some extent for at least three reasons. First, too much debt has been issued by the U.S. If the Fed were to significantly raise interest rates, the national debt's interest rates would also rise sharply. As a result, a larger portion of public spending by the U.S. government would go toward paying interest on the debt, making it harder for the government to cover other expenses. This could even put the U.S. government at risk of fiscal collapse. Second, the U.S. debt. The only way to reduce the debt under the current political system in the U.S. is to maintain inflation and increase nominal GDP, which for the U.S. is a shortcut to reducing the debt to deep ratio. Thirdly, the U.S. must artificially maintain GDP totals to create the appearance that it won't be surpassed or lose its position as the top economy in the world. As more nations switch to non-dollar currencies for trade settlement countries and investors holding dollar assets are no longer as comfortable as they once were. India recently purchased a sizable quantity of Russian coal and decided to pay in yuan. Israel, Switzerland, and other financial players have recently increased the percentage of the yuan in their foreign exchange reserves, demonstrating that they are also reducing their exposure to the dollar. A decline in the value of the dollar is inevitable given the ratio of US national debt to GDP.